All right, hello everyone. Welcome back to the RationalInvestor.co. I'm Brian Beamish, aka the Rational Investor. Thought I'd do a little video here for you guys on the Reddit and YouTube communities here. Kind of doing a follow-up of a post that I put out on TradingView here recently. And keep in mind, TradingView here is basically a public access platform. So, anybody in the public saw this. So I thought maybe I'd just do, and frankly, I was a little surprised. I looked down and I got 788 views. So somebody took a look at this. And I thought I'd just, maybe do a little bit of a public video here just to, call it a bit of a public service, call it a little bit of clarification, whatever you want. But not a bad idea that maybe I just do. I'm really trying to do 5 to 10 minute videos lately. In fact, I've got my little alarm clock here. I think I'll go ahead and set it now. I've been doing some videos for the site lately, and I found that when the timer goes off, I literally just have to stop talking, and that's it. So let's go ahead and set that now. Isn't that funny? I'm doing it while I'm recording here, but oh well, who cares? All right, so it's 8:55 now. Let's say at 9:05. Let's go the other way. Okay, at 9:05. Yeah, what the hell? Well, we'll make it 9:06. We'll be generous. We'll leave it at that. See if I can stick to that, and we'll keep this nice and short and sweet for you. All right, so here we go. I did just a simple write-up. Those people that have followed me for a while understand I'm a big fan of things like market structure. And I like to watch the year-to-date price action, and I really am a big fan of trading ranges and trying to identify sort of, where we are within those ranges, and then, that sort of sets the tone of your expectations going forward. The story for Bitcoin really over the past, the year of 2015 has basically been a zero story, right? There really hasn't been a heck of a lot that's happened here. Big ugly on the beginning of the year, face rip rally right back up to where we started, and then just a long, slow consolidation. And in fact, when you look at the profile, right, you can really see there's been a lot of business done up top the profile here. You might even argue maybe a little bit more business needs to be done up here. And if that's the case, that's, typical Hoagie for those people that know my school programs and my talk, good old John Hoagland. That would definitely be an area that he would be interested in. And another thing, a really handy part about volume profile that you should really try and keep in mind is that the profile ideally wants to look like a 45-degree angle, right? Kind of wants to look like a pyramid on its side. I think that's what I wrote to somebody here. Yeah, with regard to the point of control, it kind of wants to look like it's sort of a pyramid on its side where really price has explored the entire range. And this is really what we call the price discovery process, right? And you could argue, these little, what I like to call notches, they probably need some attention. And as I said earlier, maybe moves up top here would grab someone like Hoax, who's a value trader based off of the profile. The big message I think that you need to take away from this is that we've done a lot of business up top here, right? And maybe it's time we go and fill some of the bottom of the profile in here. It's looking kind of empty. And considering that this right here off of Bitcoin Stamp, right? And I consider Stamp kind of the, calm more exchange. I'm sure the moment I've said that, it's going to blow up now here. But I think because of the margin trading and the location of some of these other exchanges, they're kind of suspect. From what I understand, Stamp is sort of the most conservative of these exchanges. You know, feel free to debate that. I'm certainly not going to sit here and say I'm a crypto expert. This is just my 2 cents. Take it for whatever it's worth, right? Anyway, the point of the matter here is that 230 bucks looks to be what we call the point of control for 2015. And if we've explored this part of the profile up here, and I mean, this is one heck of a POC. You can see how much business has been done at 230. There's no reason why we can't go maybe explore the bottom end and just fill this profile out the way it wants to be filled out. So, you know, what are some of the sort of catalysts that are going to suggest that that process might be underway? And clearly, you know, moves back down into the POC. If this market was bullish, these moves back down into the POC would be perceived as buying opportunities, and the market would move away back higher. Here you can clearly see the market worked its way back down to the POC. There was a heck of a battle here, and then we resolved bearishly, right? You know, making reference to that concept of market structure. I was really saddened and kind of disappointed on this bull rally. We didn't just go and blast out through these previous highs. It was pretty disappointing. Yes, we did have one nice solid clothesline high, and things were looking extremely bullish. And then the next day, kapow, right? And this in candlestick terms is what we call railroad tracks. Straight up and straight down, nice big bodies there, eh? So a failure of that level was trouble, and that was right up at the top end of the range, right? So a little disappointing. Bearish market structure that's come in here. You can clearly see the M off of this chart, and we're just slowly making lower highs and lower lows. Moving averages, for those that like to follow moving average signals, we're getting a pretty fat moving average signal right here that just so happens to coincide with all of these other fails. Volume wise, you can definitely see we're making lower highs and lower lows, and it was a really nasty breakdown here, right? You can really see the M here. Momentum, you know, things with, you know, I would say raw momentum wise, things were looking relatively optimistic. We broke through these highs, but market just couldn't hold it. All right. And this sometimes happens in the market. You know, you might call this a bull trap, or I guess a bear trap, but well, call it whatever the hell you want. The point of the matter here is that it just didn't, the momentum breakout just didn't hold, right? And it does happen, especially on a railroad tracks, right? That would have been, hey, you know, the bulls all just went, oh, crap, right? And actually, you can kind of see it in volume. Oh, crap. You know, my sort of time-tested overbought, oversold indicator was suggesting that indeed we were very late to the party up top here, and we needed to calm down. So, you know, that's basically what we've done. In fact, I like to call this, when you ever see this red line get up here, it's what I like to call stupid on Willie. And when Willie's stupid, you're probably best, you know, it's not necessarily saying that it isn't a good buy. It's just saying that maybe right here over this time period, and this lasted maybe, what, about 2 or 3 weeks, maybe it just wasn't a good idea to be a buyer, right? And sure enough, all of these people that bought all the way up through here, they're all dying 1,000 deaths now, right? Now, it's interesting to see that, you know, the reason why I set all this up is that's not the case now, right? You can see Willie is actually technically stupid, stupidly oversold. And so, you know, in the very sort of rubber band type concept of the market, the rubber band was stretched too far up this way and then stretched too far down this way. I wouldn't be surprised if we have to give some give back. Now, remember I said earlier I was talking about how the POC is basically where all the business has been done. You can see how much business has been done in here. And what you often get, you know, like when the market was moving away from here, is you get sort of like, I want to move away, and then, the POC just sucks it back, right? And then, right? And the market's just going to just be, unless new massive volume comes in here, which it just didn't, right? That POC is just going to sit there and act as a magnet. So, boom, right? That's basically what's happened. As that sort of magnet effect happens, and sometimes you get overshoots. It's kind of like, if you see, sometimes when if you have a circular well, I don't know if you ever seen those in the science fairs or whatever, and you shoot a marble across it, it'll zoom out wide rather than just going in a straight line. I would kind of, suggest the markets, any market works that way. And so maybe we have a bit of an overshoot. What I do see here, though, is you notice that this trend line off of this low, this low, this low, right, all in here, that just so happened to be the failure resistance point of the rally right in here. That to me just so happens to line up right near the POC. That to me seems to be almost kind of like a pivot. And so, yeah, maybe we've overshot here, and now Willie's stupid. We can't really sell when Willie's stupid. We even potentially have a little bit of a bullish momentum divergence here forming. It's potential right now. It's not confirmed. In fact, as we update this, you'll see that prices rallied back, and oh, no, it hasn't quite confirmed yet. But look at volume. Oh my God. I mean, the buyers need to come in here massively and in size over time, just buying, 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 to break this trend here. This is a nasty, nasty trend in OBV. So put it all together, I'm kind of thinking that, we market structure wise, we had a nasty failure here at this 210 area, I guess, 208 or whatever. We had this 210 low, and we also had these lows. And I had commented earlier that I was very impressed that these lows held. That's not the case here. Bam, right? Now, it probably took a lot of effort to get the market down to here to break these lows. So the people that did push it down here, they're going to be taking a bit of profits, right? What they're hoping is the whole world craps their pants and the price just cranks lower. And then, whatever positions they have left, they just go crazy. But it wouldn't surprise me to a certain degree that, maybe they're taking a bit of profits. So I had posted, because that's what I had suggested. I said, you can't sell down here, right? But it sure looks to me like the market wants to go and explore the bottom end of the range. So where's a logical area if we're going to be hunting for areas to maybe set up shorts? And think about reloading short. So here's the OK coin without all the indicators, right? Just strictly price action. And this level right here, 38.2, this is a really important level. It's what's called I call it our first stop target. And quite often when markets move, they love to gyrate around these 38.2s. So there's 10 minutes, guys. I tell you what, we'll extend this because I'm about 3/4 of the way through the conversation. But that was a good reminder. It'll go off in another 10 minutes. If we hit 20 minutes, I got to say goodbye to you guys. But anyway, so let's get this done with. So here's 38.2, and I had suggested that, Willie's stupid and potential bull divergence. Now, you can't be a seller down here. We've broken some key support lines, and I think the market wants to work lower. But how do you sort of set up that expectation going forward? The first is that I do expect 38.2 if these are the lows, and frankly, I don't know. We might even just keep cranking lower here. And you never know with the market. But given, some of the mitigating circumstances, Willie and MACD, blah, 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 it's not unrealistic to look for sort of at least a consolidation. So as we said, 38.2, pretty realistic target, what we call our first stop. And really, this is going to frame how the market's going to act over the next little while. If we are bullish, technically we want to try and be buyers near the bottom end of trading ranges and look to be maybe sellers near the top end of the trading ranges, right? So the 38.2 might set up a situation where we can actually be buyers near the bottom end of the range if we get what I like to call a reload zone, or the distance between our mountain man level, 61.8 fib, one of the best crude traders I've ever met. And frankly, that level will be ingrained in my mind for the rest of my life. Thank you very much, Brandon. And our line in the sand, 78.6, which is fantastic example, especially since I've been trading altcoins. It's incredible to watch the line in the sand play out. As the market loses it, tries to recapture it. But anyway, that's what we call our line in the sand. This zone on the fib study is what I like to call our reload zone, or where, if this was a bull, where are the institutions most likely to reload on the, and in this case, on the long side, risking against these lows. But also, too, you can see how this study works in reverse, right? Where we have our lows here, assuming that these are the ultimate lows. And here's the top end of our range, our reload zone, the Mountain Man level. And what a coincidence, Mountain Man just so happens to coincide with the original market structure top level here. See that? See how perfectly that lines up? So, long and short of it here, Mountain Man level is going to get a lot of interest from me going forward. Trying to keep this on time. I don't want to keep going here. We might actually set up a long trade, right, to get the market back up into this reloading short zone, or where the actual market originally topped out. And you could use this horizontal support and resistance level, and this one way up here, and this one to identify horizontal support and resistance levels up in this area here. The long and short of it here is, when you play these fib study ranges, what you are doing is you're saying, hey, this is a trading range. And if I'm going to buy against the lower end of the range, I'm going to risk to the bottom. And my target is going to be a test to the top, which works out to 2-to-1. In this shorting scenario, if I wait for price to get back up into here, I'm going to say that, hey, I don't think price is going to go back up through these highs. So this is going to define my risk. And I'm looking for a test of these lows. In fact, I'm looking for lower lows. So my target is going to be way down in here, which sets up 2-to-1 reward, right? Just that simple. Okay, so the point of the matter here is, I am looking for 38.2 bounce. I think that that's actually happening as we speak. I was going to then suggest that, hey, if we got to pull back into my reload zone here, and we get some really nice looking little market structure here, I might actually have a justification for taking a little long setup, with the anticipation at the very minimum of seeing the 50% level hit. And this might actually set up one of our Hollywood Nick setups. Yeah, that might be 2-to-1. It'll be close. Where Hollywood Nick, and he's another longtime student of ours, and he loves double bottoms. He has a total model set up here, and I love this model. In fact, I've been trading the model for like 30 years. Where he might actually, take this long. I would, me, myself, I don't know whether I would be inclined to take the long, but I definitely would be looking for this reload short window to try and get on a short off of where the big boys, or the smart money, right, the market structure top, where they actually are short. That would be ideal for me. And of course, I love to hunt the midpoint. And what's so funny is that I've been using 70.5%, which technically isn't the midpoint. The midpoint's actually a different number. So I kind of figure I'm going to stick with 70.5, because that's got Brian Beamish written all over it. All right. So with that said, these are kind of the scenarios that I'm looking for. I might actually get a little bit of a long here, right? I don't know whether I would take it, because really I'm kind of hunting shorts, based on my, forecast here, and especially given how Bitcoin acted into the end of the year last year, and October, November coming up, and this market structure, and this horrible OBV, and, kind of a nasty picture for momentum. I'm kind of thinking that I would, in volume profile, I mean, I could come up with a pile of reasons to look for price to explore down below here. And, to explain this and to sort of put it into context, I just wanted to make sure you guys understood how I'm going to approach this going forward. So the green line is sort of like your bullish short-term scenario, and sort of like an ideal short setup, pie in the sky. What I could see also happening is the red line. And, you know, people were commenting, and the reason why I'm doing this video is people were commenting about, you know, what are the different lines set up. If we put in a bottom here and then we rally up and then we put in a top up here and we actually have 3 highs to risk against, then actually my trend continuation model comes alive, and that's what's called the bot. I won't really get into the bot's trading mechanics. You know, if this does start to develop like this and we never can recapture 38.2 and we're really getting nasty momentum sell signals, like I said, right now, momentum is, you know, washed out. You can't short in here. This is dangerous. And, you know, like on the fail of volume, on the fail of momentum, that was when you wanted to be getting short this thing, right? Coming late to the party here, I don't think that makes a lot of sense. You could very easily get a nice little counter trend rally up into here. So with that said, you know, I wanted to just simply give you guys a, you know, a backdrop, a context as to what it is I was referring to in this post. I've included on the YouTube feed, I've included the link to this post, so you're more than welcome to read what I wrote. And, you know, I even, you know, when I replied to this gentleman, I even said that, you know, I would probably be wanting to, you know, in simplest terms, use the moving averages to frame trades. So if we get a rally back to 13 EMA right here, you can see that's right back against to these levels. If momentum and volume signals are saying, hey, time to get short, maybe put in a nice little market structure top or a candlestick failure, then hey, a trade might fire for you. It really all depends on your trading plan, right? What do your setups look like ahead of time? You really should have all this stuff defined. Actually, you know what? I think, you know, so I'm going to leave it at that. 2 things I would say. You know, hopefully I've framed this fairly well. The last thing that I'd say is, of course, the you know, and this was specifically designed for the person that was replying to me there on TradingView. The moving averages here, you can see how they're all clustered between 235 and 259, right? You know, that's like a $20 window or so, eh? $20, $25. I would, and then, and of course, here's that trend line, right? Look at the POC. Remember, we said that the profile likes to be filled in. Look how the market has a big hole right in it when I zoom into this price action. That means to me that, hey, this area needs some attention. In fact, Oscar, he would say muak, right? So all you Spanish out there, you should know exactly what we just said there. And try to use your imagination why we would say muak. All right, so with that said, I think I've sort of explained my context, my bigger picture thinking. You know, I've done a bunch of videos for site members and stuff today on different things. The stock market, of course, it's a whole can of worms in itself right now. It's interesting how the stock market's starting to look like altcoin market and vice versa. The last thing I was going to point out was that today I did a kind of a fun project for the internet in that where are we here? And this internet experience, wow, it's quite remarkable. But anyway, I did a, let's see where we are. It's on here somewhere. Here we go. This tweet I thought was really cool. I did a short piece, just a Google document for you guys on, you know, frankly, my opinion of what it takes to actually be a professional trader and sort of make the transition from the novice sort of hacker, right? In this idea of working with a trading plan and holding yourself accountable for your actions. And what's really cool is, and somebody on the site even said, you know, it's one thing to say to people, Brian, this is what you should do, this, and this. And this picture, I think, summarizes it so well. So, you know, maybe go and grab that and just print it off and put it on your wall. Because, man, it is so perfectly true. But anyway, so what I did at the end of the document was I just said, you know, you can find all these references and all of these tools, trading plans, journals, spreadsheets, you know, a whole bunch of different links from the internet right on our school homepage. And it's all free, right? I mean, basically, this is just like the landing page for our school. And of course, you can learn about the school all you want. And right here is all the stuff that I'm talking about. You know, we have different trading plans for different markets, different altcoins, you know, all that kind of stuff. Spreadsheet, journals. Anyway, that's all there for you. If you want to use it, just go ahead and use it. You know, it's there for you. So, you know, subscribe to my Twitter feed. I think it's at CR Investor, and it's right on the tweets that we did today. I'll even copy this and throw this in the YouTube link, so you also have that too. And you know, basically, there's a nice little sort of dovetail to. It's one thing to look at markets and come up with you know, prognostications, and it's another thing to trade day in, day out, and you know, follow a plan and identify risk and identify the actual setups that you're going to take and what you're actually going to do, and to hold yourself accountable for your actions, right? It's a totally different ball game altogether. So if you need help with that kind of stuff, you know, I think that that tweet that I did today, I think is you know, it's what is a 4-page document, and I think it's a fantastic tool that everybody and anybody can use. Looks like somebody's on here right now. So that's for there for you too. So a little piece on Twitter, excuse me, a little piece on Bitcoin and sort of what you know, I wanted to put this. This TradingView publication into context, and a little treat for you if you're maybe struggling with trading, and some things that might help you out to get you on track and heading in a good direction. So have yourselves a great day. All the best, and bye for now.